Let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the market, how we analyze the market. This is Rod from BTA, and we are known as the Middle Traders. Now, we're going to take a look at the Major Index ETFs on the weekly charts. This is not going to take long at all, okay? We're just going to take a quick look at the weekly chart because you want to trade in the direction of the longer term trend. You want to look at the, truthfully, I look at the weekly first and then I go down to the daily, okay? But I'm definitely not going to do anything without looking at the weekly first. So here's the DIA on the weekly chart. Look at this thing. It's simple. Look, granted, it got back above the 150-week moving average. We closed today on Thursday just above it. But now we got one more trading day tomorrow, but for Friday. But, so let's see what happened for the end of the week. But we just got above this 150-week moving average. But the problem is we wrap back below this 4-week moving average, the white line, and this 8-week moving average, the green line. We trading below it, closing below the 4-week and the 8-week moving average. That's not good, okay? The DIA is below some very strong weekly moving averages. And then you got the 13-week moving average right here, which is the quarter, okay? So look, that's 3 months of average pricing. Not good. So right now, just like it's nothing to talk about because we below the 5 and 9, really, it's nothing to talk about. We below a downward trending 4-week moving average. What is it to talk about? All right, you got to be careful with that. So now, the only thing about the DIA, I give it this much. We holding above the support level. Now that, I have to hand it. It hasn't broken below this 306.28 level right here, this weekly, long-term weekly support level right here, 308.68, 306.28, and the 304.66. Okay, we broke below it, but I'm saying we haven't closed. We're not closing below it. That's the thing. It's about the close. For me, it's about the close. It's about where is it closing at? Okay, not the open. That's why on O'Neil charts, if you look at O'Neil charts, he don't even have the opening bar on there. Okay, so when you look at a bar chart, you don't see this little dash to the left, which represents the open. He only has the close. The close is where it's at. Right? It's the last hour, the power hour. Right? Well, it's the close. The close is what's more important. And right now, the DIA is closing above this support level right here, which is good. If it starts breaking below that and closing below that, see this big, thick red line right here? This big, thick red line, 295.87. This is the highs of March 2020, right before the corona collapse. We start breaking below this and closing below this, and the momentum stay the same, I would not be surprised if we don't come back and test this low right here, which was right at the March 2020 highs at 295.87. So 306.28 and 304.66 for the DIA on the weekly chart is where it's at. You can see the volume on the on-balance volume on the weekly chart is still pointing straight down. Accumulation distribution pointing straight down. Price volume trend pointing straight down. Now, the only thing here that is interesting, on the weekly chart, the stochastic is trying to cycle up and give a bullish crossover. That is interesting, okay? So you got to watch that, all right? You see the stochastic is tightening up, all right? But it's below 20, so it's not of concern right now. If you're really short, it's still below 20. But it is trying to squeeze and come up and recycle up this downward signal line right here. So this yellow stochastic line is right there, but they're both below 20. It's at 1846. It's below 20. The prices are closing lower and lower within this 14-week range. No doubt. It's at the lower end of the range. it's down in the 20. But these are extremes right now. Okay, so that's what I'm trying to get at. These are extremes, and now it's trying to cross over. Look, we got that low here, we got that low here, but then we haven't seen the stochastic this low since over here March 2020. Okay, so this is extreme levels. We got that low again over here. Okay, when would that? Let me see. When was that? Right here. This was back in 2019. Okay, so we down at extreme levels right now. We got to be careful. All right. So you know what happened with extremes? That sometimes you just get a relief rally and it could bounce. But right now, excuse me, it is still trading pretty hard to the downside, and the volume is clearly coming out. But we're sitting right on the 150-week moving average on the DIA. That can act as support, and you just got to be careful. You got to be very nimble in this market. You know, like I was telling Bryson earlier today, look, at the end of the day, you know, I'm very quick to pull the trigger right now and get out of a trade. If it's not working, I got to go fast because you could get a relief rally and this thing could bite you quick. Okay, so this is some high volatility, very difficult trading right now. Okay, if you could be successful in this trading environment, when the bull market come around again, you'll see it's like taking candy from a baby. But anyway, here's the S&P, the SPY, the ETF that tracks the Standard & Poor's 500 on the weekly chart. Look at that 150-week moving average. We right there. We closed right above it. But the problem is you're still trading below a downward trending 4-week moving average and a downward trending 8-week moving average. And don't even concern yourself with this downward trending 13-week. It's pretty far up there. First, you got to get above that downward trending 4 and that downward trending 8-week. But we holding support right now at the 150. We traded down to it this week. Okay, you can see the low of the week traded right to it, but we bounced off of it. But we still below this downward trending 4 and this downward trending 8-week moving average. So, hey, you trading below a downward trending 4-week moving average. You trading below a downward trending 5 and 9-day moving average. What is it really to talk about? I'm not saying be short, but to be long, I mean, you could be asking for some pain. Okay, so let's see. Let me bring this down. This is a structural chart for weekly chart for the SPY. Now, it did break right below that 380 level that we talked about yesterday, and we talked about it on Monday, and we talked about it yesterday in the end of the day video that we put up. If it break below that 380 level, 380.54, that was some serious support right there. Well, we broke it today and we closed at 377, but it came right down to 371, this weekly support level right here, and it bounced and it closed at 377. So, but right now it's below the downward trend of 4-week, downward trend of 8-week, and it's below the 380 level. So that was the support level that we was talking about. I said if it break below that, maybe I'll take a nibble. So I took a little nibble on it today. So let's see if it'll hold. If it doesn't and it trade back up, I'm gonna be very quick to get out and keep it moving, because this market has to behave like we want it to, or you gotta let it go. This is not the chance, this is not the time to let this thing try to play out and give it a lot of room, because it's so volatile. You're just giving it room to hurt you, as far as I'm concerned. Now here's the on-balance volume. Look at it on the weekly chart, pointing straight down. Accumulation distribution pointing straight down. Price volume trend pointing straight down. Okay, the volume is clearly coming out. The only thing is, once again, the stochastic is trying to give a recycle back to the upside. It's trying for the SPY also to make a bullish crossover at these extremes. Okay, down here. And once again, you don't see these extremes too often on the weekly chart. Okay, you don't see it too often. 3 times in the last two years or something like that. But right now, it's trying to the stochastic line is trying to cross above its signal line. But look how low it is. It's at 1558. So it's not a major issue right now, but it's trying to cross. But the MACD is pointing straight down, and it's expanding. The histogram is expanding to the downside. The momentum is clearly to the downside. At the end of the day, you're trading below a 4-week moving average. Your high of the week touched the 8-week moving average and got rejected, and the volume is pointing straight down. You're breaking below support. You're trading below a 5-day and a 9-day moving average on the daily chart. Come on, let's be for real. I mean, who's going to try to be long that? Okay, good luck if you are. Here's the Qs. All right, here's the Qs. Here's the Q. The QQQ, the ETF that tracks the NASDAQ, but specifically the NASDAQ 100, right? The big NASDAQ 100, big market cap stocks. But look, it's below 150-week moving average. Not good. It's below a downward trending 4-week, a downward trending 8-week, and it's coming down near the 200-week moving average. And it's already got higher volume than last week. So if it continued to trade lower and close below the close of last week, which it looks like it's definitely going to do that, it could rally back up and get back above this high tomorrow in one day. Maybe it will. Anything is possible. But if it closed below last week's close, which is way up here, well above the 150-week moving average, if it does close below that, the volume is already higher than last week. So this week is going to be a distribution week. Okay? Look, this is not something I would be long, and I wouldn't even try to buy it right now if I wanted to be long. I'm not trying to catch the bottom on anything, okay? So now look at the structural chart, our weekly levels, right? We're looking at the weekly charts for the QQQ, our structural level. Well, I said if it break below 280, I'll take a nibble. This horizontal support level. Well, it did it today. It broke below 280. But it kind of got right back above it and closed right on it. It's at 280.28 right now, and the support level of 280.21. So right now I'm flat, right? I had it was down hard today. I was up $3 or $4, but it closed right back on the support level. So I'm flat right now. Let's see what happens tomorrow. But at the end of the day, if it breaks below the support and it can't hold the support, and it start trading below it, I wouldn't be surprised if it don't come back to 265.17. I would not be surprised if it don't come back to 265.17. But I'm playing the probabilities right now, right? I'm speculating on the probability right now because at the end of the day, it could trade down. If it break, it could come down here to 275, which is the low of today, or it could go down to the close of 2 weeks ago, which is 274. The lower 2 weeks ago, 269. But if it come all the way down to the next fractal horizontal support, that's 265. Okay, that's 265. But if it goes against me, if the trade goes against me, well, look, you got the 5-day, you got the 9-day right over your head, and you got the 4-week moving average at 284, and you got the 8-week right on the 150-week moving average right around 290. So if it starts trading back above 284.60, that's a lot for me to think about. I'm probably going to take my loss, get out quick, and it's over, right? Point blank and period. I'm not going to hold it. I'm not going to give it much room to rally. It could be a relief rally in the midst of a bear market, downtrend. I got to go. So let's see what happens. So the risk is about $3 to $4, but the potential could be down from 280 to around 265. We'll see what happens. But for right now, I'll be out of here if it close above that 4-week moving average. If it close above the 5 and the 9 on the daily chart, I'm gone. So look at the on-balance volume. It's pointing straight down. The volume is coming out. Accumulation distribution for the Qs, the volume coming out. Price volume trend, the volume coming out. The only thing, stochastic is trying to recycle, but it's at lows. It's at 13. Look, this thing is clearly pointing down. Okay, let's look at the IWM. It's nothing changed. The IWM, look, as far as the IWM, look, this thing is the key moving average. It could be in some trouble here. Let's bring this here down, or bring it up rather, so we can see it. Look at this thing. Look at this thing. I mean, you got to be careful this one. Look at the IWM on this weekly chart. I mean, come on. Look, you're asking for pain. You're asking for trouble. All right. This thing is below the 200-week moving average. And it's trading below a downward 4-week and a downward 8-week moving average. It opened below everything and it closing right now below everything. Nothing to talk about. All right? There's nothing to talk about. There's nothing else really to discuss. It's a wrap. It's in trouble. It's in trouble. I'm not trying to play with that. Okay? And on the structural chart, looking at our support and resistance and our trend lines, you see that big, thick red line? That big, thick red line. Okay? The March 2020 highs, we closed right on it. The March 2020 highs is 169.14. We closed today at 169.36. We break below that, start finding resistance at that, and trade down. I don't know how low it can go. So I can't be long this. I'm not saying be short it. But I definitely can't be long. Not this. Not something that's below the 200-week. The 8-week is, the 4-week is below the 200. The 8-week is trying to cross below the 200. Prices is opening below the 200 and trading below the 200. Trying to hit March 2020 highs. Come on. I don't care what no nut on TV tell you about. It's time to start go shopping and buying the bottoms. Look at yo. Yeah, okay. All right. Okay. Yeah, okay. They tell you that so you can start buying and they sell you their shares to get out. You know what I'm saying? I hate to tell you, that's how the game works. So look, here's a 150-week moving average right here. This is the ITOT, the total U.S. market, the weekly chart. You see this thing is below 150 moving average, 150-week moving average. I shorted it when it broke below the 150-week moving average. We talked about it about 2 meetings ago. I think it was last week, Thursday. I said, look, this thing break below 150-week moving average. I'm going to take a chance of shorting it, take a nibble, pick my stop at the 150-week moving average. Right now, it's closing below the 150-week moving average. It broke below the 150-week moving average. The 4-week is below the 150. And the high of this week found resistance at the 8-week. So far, it's already looking like it's going to be a distribution week. If this stock reverse, which is possible, don't get me wrong, it can rally back up tomorrow hard and go to the moon for all I know. But if it closes above last week's close, then this would be accumulation. But right now, it looks like it's going to close below last week's close if it stay below that tomorrow. Look at the volume. Look at that distribution compared to last week. Distribution on the ITOT. Okay, it's trading below the 150-week moving average. There is nothing to talk about. On the daily chart, it's closing below the 5-week and the 9-week. Yo, this is not a situation where you want to be long. If you want to go shopping, look, I'm going to wait until the market starts showing some upward momentum. I'm not going shopping on anything, okay? I don't care how cheap somebody say it is. I don't care how great they say the company is. The chart is telling you it's pointing down, okay? Here's that support level we talked about right at this fractal at 84.59. It broke it, and it's trading down. The thing about the ITOT, it only moves $2 or $3 a day. So you're not going to get rich overnight, and you ain't going to get hurt that bad because it only moves $2 or $3 a day. That's what I love about it. I don't mind getting a steady $2 or $3 every day, okay, if I'm on the right side of the trend. Compared to the others, if you got other stocks that you're into, this is an extra $2 or $3 a day. I don't mind that. But the main thing for me is I don't want to lose a lot of money. Okay, I take whatever I can get. I just don't want to lose a lot. There's only 3 things that's going to happen for me that I look for me to happen for me. It's only 3 things. I'm either going to lose a little bit of money, I'm going to make a little bit of money, just a little bit, or I'm going to make a lot of money. Those are only 3 things I want. I don't have no problem with either one of these 3 things happening. Losing a little bit, making a little bit, or making a lot. What I don't want is to lose a lot. Okay? So that's what it's all about. It's about not losing a whole lot of money. Living to fight another day. That's it. We have to try to live to fight another day. And I'm telling you, going against the trend could be a problem. All right? Be careful. Be careful. Don't get hurt. So that's it. We'll pick it up on the next video. But I'm saying to you, just please don't get hurt. Paul, you got any questions?